It's Monday, the 1st of July, 2024. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories in 5 minutes. Let's get going. Story number 1, it is 1 July, of course, and there are a range of changes that kick in from today, from income tax cuts for employees to superannuation guarantee rate increases for employers and a whole lot in between.
Sure is. Everyone can expect more money in their pay packet as a result of the Stage 3 tax cuts, which in total are worth more than $100 billion. In short, there's no tax if you earn up to $18,200. A 16% rate kicks in up to $45,000, then it's 30% up to $135,000, 37% up to $190,000, and then anything over that you get taxed at 45%. There's also an increase in the minimum wage, which affects 2.6 million Australian workers. That will flow on to even more workers. The minimum wage rises 3.75% from $23.23 an hour to $24.10 an hour. There's changes to paid parental leave, another couple of weeks there. Also, there'll be $75 energy rebates each quarter during this financial year. There's indexation of welfare payments, and the superannuation guarantee will rise from 11% to 11.5%. Yesterday, the Prime Minister, Anthony Albanese, was out spruiking the cuts as part of the government's response to the cost of living crisis. He said 13.6 million Australian taxpayers are about to get a tax cut.
Sean, story number 2, the S&P ASX 200 closed up slightly on Friday to 7,767.5 points, meaning that for the full year, the benchmark index actually finished up around 8%.
That's pretty good. Winners and losers for the last financial year. Well, it was the tech stocks that had the standout year. Technology index was up 29%. The financials index up 23%. Consumer discretionary index up 20%. And the real estate investment trusts was up 17%. If you look at those, technology was all about AI and data centers, but the other three, financials, consumer discretionary and real estate investment trusts, all about expectations that interest rates would fall. Didn't actually happen last year. In fact, they went up. Anyway, the shares of those interest rate sensitive stocks did very well. The worst performing sectors last year were consumer staples and energy, both down about 7%. The materials index finished down around 6%. Turning to the currency market, the Aussie dollar finished the year at 66.7 US cents, which is exactly where it started, 66.7 US cents. Went nowhere. Well, that's not quite true. It traded up to 69 US cents last July, under 63 cents briefly last October, mostly in that 65, 66 cent range.
Sean, story number 3, Federal Treasurer Jim Chalmers has approved ANZ's $4.9 billion acquisition of Suncorp's banking business. This is nearly 2 years after the deal was first proposed.
Yes, ANZ boss Shane Elliott said the deal will make ANZ a tougher competitor with rivals. That's Commonwealth Bank, Westpac and National Australia Bank in particular. It will be the biggest merger in banking since Commonwealth Bank took out Bankwest during the global financial crisis in 2008. The deal was initially knocked back by the competition watchdog in August last year. That decision was overturned by the Australian Competition Tribunal. The Treasurer said the deal was in the national interest, but he put some conditions on the merger. ANZ, for example, won't be able to close any regional branches anywhere in Australia for 3 years. It's also got to try and join with the Australia Post banking service. Obviously, plenty of work, but both companies are hoping it will be completed by July 31.
Sean, story number 4, it looks like all the talk of interest rate hikes could have spooked a few buyers over the weekend, with the preliminary clearance rate for auctions across the country coming in at 70%. That's down nearly 2.5 percentage points from a week ago.
Yeah, there also was a drop in the number of auctions, according to CoreLogic. Melbourne's preliminary clearance rate came in at 68.2%. Sydney was at 72%, Adelaide 82%, Brisbane a touch under 63%. Basically, the winter slowdown has kicked in. Of course, 30th of June gives me the excuse to look at how house prices did for the full year. Perth led the way, house prices up nearly 24%, massive. Brisbane and Adelaide came in at 16 and 15% respectively. Sydney was 6%, Darwin and Canberra just over 2%, Melbourne 1.3%, and Hobart actually went backwards by 0.1%.
Story number 5, looking overseas for this one, Sean, Nike, the world's largest sportswear company, has downgraded its earnings outlook on the back of waning demand for its sneakers and its apparel.
Yes, the owner of Jordan and Converse Style said revenue is declining rather than growing, as they had expected. Shares fell 20% over the weekend, down by about the same amount in the previous 12 months. Hasn't been good for Nike. Executives blamed the slowdown in part on lifestyle brands, including Air Force One and Nike Dunks. which get a high proportion of their sales online. The lifestyle category's sales fell for the first time since the start of the pandemic when demand for casual attire took off. The slowdown is adding urgency to Nike's efforts to speed up product development. Also, there's a bunch of new competitors making some pretty good inroads. Hoka running shoes was one example. Nike's promised to prioritise sports, new products and wholesale partners to turn things around.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Monday, the 1st of July, 2024. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.